So, good afternoon, and thanks for having me here. It's a very cold and wintry day here in Helsinki. So, my name is Arni Ekholm. I'm the managing director of Relais Group. Have started in 2015 this nice journey. I'm going to talk about Relais in brief. What is Relais about? What do we do? A few words about the vehicle aftermarket, which is our operating area and market. Then following the theme of today, our acquisition strategy and how do we create value for the shareholders. And then summing it up as what type of investment is Relais. And as you can see on the picture, I just want to highlight that we were accepted now on the main list of Nasdaq Helsinki the 1st of December. So it brings us great pleasure to be also here to talk about our strategy. Good. What is Relais all about? We consider ourselves as a leading Nordic consolidator and a smart compounder. I will get back to what we mean with the epithet smart compounder. And we have a sector focus on the vehicle aftermarket as opposed to a compounder who would be agnostic on sectors. So we focus on what we are specialized on and know the best. We are also a growth platform for the companies we own. Looking at the financial performance of the first 9 months of this year, our turnover was 185 euros with a growth of almost 13%. And the comparable EBITDA was 27.6 million with a growth of 2.7. And then the comparable EBITDA was 17.9 million euros, minus 8.8% during the first 9 months compared to the same period last year. Relais Group growth strategy is very much geared on acquisitions and also combining that with the organic growth. So that's the way we create shareholder value. We are the active consolidator in this market that we know the best. We combine it with organic growth, which is supported by synergies between these companies. The sector focus gives us a unique opportunity to have benefits of synergies between the companies. So for us, synergies is not a bad word. It's actually one very big part of our organic growth. Then we combine this value creation and growth with operational excellence on continuous development of operations. It's a very broad terminology, but what we mean with that is that we try to be as effective as possible with the operations that we have in our companies, and whether it be improving the gross profit or decreasing the ratio of net working capital on the wholesale business and whatnot. Good. Our growth strategy and value creation model is a classical one for a compounder allocating capital. It's a buy and build model. We spend a lot of time and energy on finding the right investment targets and companies that have a very good strategic fit to us. And we want to be confirmed that the core of the company is healthy. There's good management, stable profitability. So Relais Group is not after distressed companies as a rule, basically. We want to have the basic things in good place. We also want to see robust and meaningful value creation potential for all the companies that we acquire, whether it be standalone companies intentionally or look at synergies and further M&A potential on bolt-on acquisitions. And as I said, since we have a sector focus, we can use the deep knowledge that we have of the target companies already in this process. So we are not relying only on statistic data. We know a lot of people, we know a lot of companies. That gives us a kind of competitive advantage also from that perspective. Valuation, I will come back to that. It's important, especially in this time when the price of the capital has risen, to have the right valuation of the companies that join Relais Group. Then the next step on the buy and build model is then, as after we have acquired the company, is to make sure that we build the company further. We don't just buy and forget the company, of course. So we tend and we want to develop the companies, take them on a new level. Usually they are already on a high level, but we put in also competence in these companies. We participate in the board work of these local companies, and also make sure that the synergies are followed through and utilized, and then we have more focus on execution and strategy. I mean, synergies are always very easy on Excel sheet, but much more, let's say, tougher to realize in the real life, and hence it needs a lot of focus to make them happen. Smart compounding, what do we mean with that? We try to be very, let's say, disciplined in the way we do the deals, and the valuation is right. We have the sector focus. We do not only consider us as compounding capital, but also competence, since we have this sector focus. And then we have the possibility to either look at new platforms, or then to make add-on acquisitions on the platforms that we already have, and also then by all this work accelerate the organic growth that we have with synergies and the sector focus. So it's a kind of a, I wouldn't call it a self-playing piano, but it has some reinforcing factors built into this model. A short look at the growth journey of the company. We started 2010 with only one asset in Startax, which is and still is concentrated and focused on electrical spare parts and equipment, and hence the journey has continued, so that we have almost we are 10 times bigger than we were in 2010. Made roughly 10 acquisitions during the last 4 years, and this year we have done 3 acquisitions, in one in Sweden and 2 in Denmark. I just briefly get back to that one. So it's been a very interesting journey and a high acceleration of growth, especially since 2019, when we were first listed on the First North Growth Market here in Helsinki. We divide our business into 2 major groups or platforms, if you will. Wholesale of spare parts and equipment in the aftermarket, and I will explain what we mean with aftermarket. And we have about a dozen of companies in this wholesale division, which is about 67% of our total turnover during the first 9 months. And then we have a network of repair and maintenance workshops in Finland and Sweden, over 30 workshops concentrating on repairing and maintenance of heavy and light commercial vehicles. So these are, in the big picture, the 2 main groups. And within the wholesale group, we also have a very important product group called lighting, which I will soon explain what it is all about. And I forgot to mention, we have about 1,000 professionals working for us in 6 countries. So before going to the acquisition strategy, just a quick look at how the business is divided by product group. So the spare parts, that's the bread and butter of the company, has been for a decade soon, and that's about 1/3 of the business. Lighting product group, which are mostly our own brands, so it's a kind of a diamond that we have within the group of own brands. So the share of private label of our business is almost 1/4. And then the equipment business is 13. That is electrical equipment, mostly for vehicles. And then repair and maintenance, we do not split it into work and spare parts in this context, so it's considered as one product group, and resulting in a couple of acquisitions. It has grown last year quite dramatically. Good. Vehicle market, on a very broad perspective, a helicopter perspective. The market consists of 19 million vehicles, roughly, in the Nordic and Baltic countries. So our sweet spot where we do business and also focus on acquisition strategy is the aftermarket. That's the life that the vehicle has after it has been imported into a specific market, and all the while before it is demolished at the end of the life cycle. You can do a lot of things for the vehicle, either equip it or service it and maintain and install new equipment on it. So for us, every vehicle is a revenue platform. The aftermarket is undergoing a big change and evolution, even with some disruptive themes, electrification, new powertrains, digitalization. It is a big growing market. It is has some defensive characteristics. I mean, if we take a longer perspective on the aftermarket, especially on the spare part and repair and maintenance, usually in tougher economic times, the market has been fairly stable when people tend to use the existing vehicles longer, and companies as well for the commercial vehicle, rather than buying new vehicles. So it has this business is driven by kind of two different factors and growth factors, the sales of new vehicles, and then of course also the age and amount of existing vehicles. So we are very keenly following on the new technologies and of course adapting our business to it accordingly. Okay, let's go to the topic of today, the acquisition strategy. How do we go about it? I would say that we have kind of ramped up this acquisition activities during the last 2-3 years. As you saw also on the growth of the company, we are very disciplined. It's not that we have a huge organization working on this. We have dedicated people analyzing the market and also leading the acquisition function, but all of us in the management team and also some board members are participating in what we call a acquisition committee when we are kind of analyzing these companies. So it's all about having a broad funnel of companies, a pipeline, which then boils down to a fewer candidates based on certain criteria. And we are disciplined in this matter, and also look very much on getting the right companies and right valuation, because we are, as Petri stated in the beginning, using the shareholders' money and allocating the capital. So we need to make sure that the companies that we choose fill these criteria for return on capital employed and so forth. How do we then decide the attractiveness, excuse me, of the different segments and different companies? I won't go through all the details in this, just give a let's say a picture of what kind of criteria we use when we are deciding the attractiveness and market size within aftermarket, the possibility for growth, cyclicality. We tend to try to find businesses that are not very cyclical, or at least if we have some cyclicality, that we would also have some counter-cyclical companies in our portfolio. Classical profitability parameters, and then of course also from a capital deployment point of view, looking at parameters which are balance sheet related. And then also what kind of growth possibilities we have in a certain niche on the market. And we are also looking at potential new platforms. Of course, that is a bigger question within the aftermarket. But then, of course, what kind of platforms are there, and how, from a capital deployment point of view, how attractive would those new platforms be? Good. And then, of course, attractiveness by the target company. There's a lot focus on the purchase price, which is natural, because that is usually where it then focuses in the negotiations. But we also see beyond just the price. We tend not to pay for the synergies up front, but we might have a earn-out mechanism if there's a clear path that we can see that it makes sense to have such a structure of the deal. Right. How does the M&A landscape look in the Nordic markets from our perspective in the vehicle aftermarket? Unsurprisingly, there's quite a few Swedish generalist compounders. I think the whole concept of compounding is very much, I would maybe say, more advanced there, but there are more companies doing this, and also some of them are investing in our niche. There are not so many other compounders focusing on the vehicle aftermarket at all. Then, of course, the typical PE companies also are competing with us from of the same targets. How do we commit the management? We try to pay with shares if we want to retain the previous owner or the current owner of the company. We might even do that for the management. It in no case is kind of similar, so there are no really clear rules, but we only use our share, which has a diluting effect in case it makes sense for us to realizing the future strategy of the company. We try to be selective with earn-outs. It is a good solution sometimes, but also the fact that there is a certain who did what type of discussion often after 2-3 years when the earnout is then decided how much is it, and then it sometimes also takes away the liberty of the new owner to maneuver the new company. But sometimes it is a good solution. Right. From the top of it, the aftermarket is fragmented and there's solid underlying growth. So this is an attractive market as such, where there's a lot of good growth possibilities, also organic growth possibilities for the companies that we acquire. What about the multiples? There was a lot of hot air in the valuation of the companies for the last, let's say, 2 years. They have, to our, let's say, observation, or what we have observed during the discussions, come somewhat down following the general, let's say, decrease of company valuations, but it's not a big drama around here as such. As I said, we are disciplined, so if you would ask me for what kind of a, let's say, rule of thumb, I would say between 4 to 7 would be a very general rule for the EBITDA multiple, but this varies a lot case by case. Then I want to take the opportunity just to highlight our recent acquisition. Very solid company, not too big, 4 million euro, but very profitable, 1.1 million euro adjusted EBIT. Very experienced, good married couple who have created the company and wanted now their baby to get a new owner and also stay on board as board member, the previous owner. So that is a kind of good solution for us, and we see immediate synergy potential with our existing company, SEC, for these two companies are completing each other in a perfect way. This just to give you an example of this kind of perfect add-on acquisitions where we get the new customer base for existing products and also cross-sales potential for our existing own brands. Right, so then approaching the end of my presentation, Relais as an investment. As I said in the beginning, we are an active sector-focused consolidator. We have a strong track record of successful acquisitions. We have a solid cash flow and profitability track record, gives us possibilities to finance a part of the deals with our own cash. The market is growing. The underlying market, the installed base is broad, and it has some defensive characteristics. We have a growing lighting business with own brands. It's a magnificent business, and if you look at the truck in the picture, each of these kind of trucks can easily take a few thousand euros worth of lighting as equipment. We have also our own e-commerce platform that we are using for webshop purposes in the Nordic market, so I see a good potential for growth there. And we have an efficient and decentralized operating model, so we don't have a heavy headquarters staff. There's a lot of power in the countries. Even from an acquisition point of view, the group companies can do their own acquisitions to a certain limit supported by us. So this was the presentation from my side, and then I think, Petri, you can pose some questions, which I'm happy to entertain.
Yes, indeed. We have some questions again. Please keep them coming while we go them through one by one. Few first ones are on the acquisition process. You have acquired many companies during Relais history. Can you tell us what have these processes taught you, and how have you developed your acquisition process?
Yeah, I would say in a big picture it's all about people. It's not all about, but I mean, you have to have the trust. It has really taught me to invest a lot in the dialogue with the owner. Now I'm talking about not non-structured deals, but even in the structured deals, it's very important to have a good and open dialogue and trust, because then it actually you can agree some of the terms already up front. And I think that the more precise you can be on the so-called term sheet, the better it is, because then if you start ripping up the details at the end of the discussion, that is really taking time, and also because you tend to use some advisors every now and then, it also costs a lot of money. So the earlier you can get the trust and agree the details, the better. I would say that's a kind of big picture answer to your question.
Sure. Continuing on the process, given that you developed the process, can you give some indication on how long or time-consuming is an acquisition process?
It's very seldom quicker than 6 months, to be honest, from the start to the end. I mean, it really, if you really push, it might be shorter, but I would say with about roughly the 10 I have in this company, it is sometimes it can the process as such depends on what do you define when the process has started, because it can take years from the first dialogue with the owner.
Yes.
But when you agree the terms and then you start to finalize everything and you do the DD, then it might take 3 to 4 months, but usually it's more like a 6 months process, I would say.
Next is on capital allocation and rates. Lately, the significant raise in interest rates obviously is a somewhat big change to what we've been used to in the past years. Has this in any way changed how you look at capital allocation?
I think we, as I said, we have been disciplined, but now you need to be even more disciplined, and also it puts a lot of focus on the valuation of the company so that you get the equation running, so that you get the desired return on capital. So from that perspective, yes, that would be the first observation. Then being more, let's say, picky with what we buy.
Then we have a question on synergies. You typically look for some synergies from sales after acquisitions. Can you tell us some case examples where you've been able to gain these synergies?
Yeah, for sure. Almost in all the cases, when we are buying wholesale businesses, we then can open the distribution for our own branded goods. So, and that has worked with almost all the companies that we have bought. We have been able to boost the lighting sales, whether it would then be STS or Huzells or then Raskone in Finland. And also the other type of synergy is that since we have workshop business and then we have a wholesale business, we can then source the spare parts internally from our own wholesale business rather than the workshop buying it from external wholesalers. So that is a clear source of synergy. But as I said in my presentation, it's not like with a snap of fingers, because then they are commercial. The companies need to have a good possibility to succeed, and then sometimes we don't have all the spare parts. So of course we can't, don't buy it from there because we don't have it. So.
Right.
So you get the picture.
Yes,
yeah,
indeed. Then it's on the vehicle aftermarket. You currently operate in spare parts, lighting and equipment, as well as repair and maintenance business. But in your M&A strategy, you look more broadly at the whole Nordic vehicle aftermarket. Are there some areas in the market that you find especially appealing, but you're not currently operating in?
Without maybe going too much in details, there are some sectors, yes, in the aftermarket where we are not present at the moment, but I would be unwilling to be too open about what sectors we are looking. But there are some niches and even bigger sectors where we are not at the moment, either whether it's a product group or service. I could maybe say where we are not wanting to go it would be the resale of used vehicles, or because from a net working capital point of view and also from a synergy point of view, there might be some. But still, it's a kind of business that we rather let other companies who are better on that to take care. But that was I can't be more specific than that.
Understood. Then on hiring and new employees, if you had to hire 100 employees immediately, how would you position them?
I would probably a little bit shooting from the hip, but at least 50 of them would go to the workshops as mechanics, if they were ready educated mechanics. So I guess roughly that type of amount of mechanics we could employ and then to take more business. For the rest, we could probably need some help with some projects, but 100, an increase of 10%, I think we would have a tough time so quickly to find jobs for them.
It will take time to digest.
Absolutely, yeah.
Then on integration, how much work and time an integration process takes after the closing of an acquisition?
No case is identical with each other. So we have different types of integration ambitions with the companies that we buy. I mean, there might be, if we buy a workshop, we might have, or we have already identified the potential for, let's say, the transition of spare parts. So that will take some time for the purchase department then to match the numbers and so on and so forth. Our modus operandi has not really been to make a hard integration on the ERP system, but we do that as well. And the ERP systems and other, let's say, business intelligence systems might take 1 to 2 years even from day one or for the word go to when it's finalized. So it's anything between 2 to 3 months to 1 to 2 years. So every case is different.
Understood. This was our last question.
Thank you, Petri.
Thank you for this, and
thank you.
Thanks
for
to
joining.
our viewers. You can find research on today's presenters at Inderes platform, and also these presentations will be available there later today.